Hi guys, it's Ian from OSBFX. It is 2:53 in the afternoon, Tuesday the 16th of November 2021. I just wanted to do a quick video update of where I believe we are. I believe that the euro as a single currency could already be on its way higher when we're looking at all the euro crosses. And if that is the case, then we're going to have to be reliant on the dollar basket to get to our level in the euro against the US dollar. So let's get to the charts. What I want to do first is highlight what we're looking at. So these are the single currencies. Going to go to the euro first. So there's two levels here. First level is on the weekly chart. We've got a confluence area to the downside here. So round about 434, easy for you to say. So a butterfly formation down there. But what we are seeing is this here. So we've got a 261.8% extension level on the intraday chart. This is a 4-hour chart, and we're just holding on to that and starting to make inroads higher. Now, normally, I would say let's focus here. But what we've been talking about today is the 261.8% extension and the fact that sometimes we see short entries. So basically, if we look at the euro crosses just as a standalone product, so we go to the euro dollar, like we said, 261.8% is at 112.80 on this time frame, which is the 4-hour chart. This is our prime area of support, or what I'm looking at as for a long entry. And then I've also got this support here, the 61.8% fib, which is at 112.92. So pretty close together, and that's what we like. We like these confluence areas to the downside. I'm hoping that this move or potential move, this last move, is driven by the US dollar. So if we go back to the single currencies, and we like to play off these dotted black lines, so it's continued, the dollar index has continued to move to the upside, and we've got this resistance here at 173.14. Why is that important? Well, if we go to this time frame, this is the 8-hour chart, 173.14. This makes a bat formation, but a word of warning here, anywhere in this zone makes a bat formation because it's 88.6% and it's also 161.8% there. What I normally try and do is try and get as close to the black line as possible, but there's nothing to say that this pattern is now not completed, and that's all we're going to see. So people who fade trades, this is potentially a good time to now start fading the dollar if you believe in this negative dollar stance. We've seen a move to the upside on the back of retail sales. Now, retail sales are not normally a game changer with regards to economic releases, so I was quite surprised to see that move to the upside, to be perfectly honest. So basically that euro dollar, if we're going to get down there, I think it's got to be a spike higher, just a pop higher in the dollar index to initiate that outlook. Because when we look at the other euro crosses, and let's have a quick look there. This is euro sterling. Okay, this is the weekly chart that's completed what's known as a bat formation that offers a bias to the upside. Doesn't look like it at the moment, but it does. If we go to this time frame, which is the 8-hour chart, we look to be completing the BC leg, so then driving higher either towards this zone or this zone here, so 87 sort of 20 area or 88.30 area. I favour the latter, this one up here. And if we go to this time frame, we have got a 261.8% extension. Now I've just put here the euro highlighted, a 261.8% extension, the single currency, and this is looking pretty bullish now. So that's one of the euro crosses that has a potential to move higher. If we go to euro yen, again, that's not quite there. The support level is down here, 129.35. But what we have got, we can see a reaction higher. So we're sort of getting these dips being bought into. Again, 261.8% down here. But Euro Swiss, we're getting reaction to the upside. Euro New Zealand, we've got a 261.8% extension here at 161.10. That actually looks like a treble bottom formation now, and that could push higher. And this is the medium term picture for that cross. So again, it's not just a dip that's being bought into, it's the potential of maybe nearly 3,000 points there. Euro Aussie, again, this is just the BC leg. When we look at the 1 hour leg, we've hit a 261.8% extension, and we're starting to move higher, just keeping an eye on my trades. And then last but not least, Euro CAD. We've got a 261.8% extension on the daily chart, which has just spiked down to yesterday. The 1 hour chart looks like it's got more to move. But what I'm trying to explain here is that we shouldn't just be looking at the euro against the US dollar. We shouldn't just be looking at sterling against US dollar or euro sterling, etc. We want to be looking at the different single currencies. So how is the euro being affected? We've seen a long-term downtrend in the euro. Are we getting towards the end? Well, virtually all of these all of the euro crosses are highlighting the potential for that. What we then want to do is to try and find the best counter currency to trade that single currency, so be it euro dollar, euro Swiss, euro sterling, etc. And let's just do this again, but let's just do it for all of the dollar pairs. So we know euro dollar, we really want to see it lower. Well, I do, to be able to buy into it. Sterling dollar, again, this has the potential to dip down towards a support zone, so that's not quite there yet. Dollar Swiss, this time frame, so this is the sort of sell zone, if you like, which is up here. So again, there's still that chance of spiking higher in the dollar index. The sell zone there, I believe, is between 93.20 and 93.36. Dollar yen, we've been talking about this. I mean, if this comes to play, then there's a potential of a 21 risk reward trade on, moving us all the way down to 109.50. Dollar CAD, I think this is more like the sell zone, which is higher up, 126.63. So again, still chance for an upward move in the dollar there. New Zealand dollar, this was a 61.8% fib here. So now I'm rattling on a little bit, and we've pulled higher. Could see a double bottom there. It's not the favoured trade by any means. And then 61.8% playing on the Aussie. So again, expecting that bias to flip to the upside. And if we look at here, we had this 261.8% extension overnight. That's moved lower. Again, that's moved lower really with the dollar moving higher. It's nothing to do with the Aussie. But one of the single currencies, or the dollar basket, which highlights potential for this to still to move higher, is this time frame. This is the 8-hour time frame, and the zone is not seen here. So what I'm trying to say is that you should be not just looking at the dollar or not just looking at the euro. We should be looking for marriages, and we want to find optimum levels to marry two single currencies together that hold decent risk reward setups for our analysis. Okay guys, I hope that makes sense. I'll be back soon. Many thanks.